Thank you, everybody.
Yeah. Here, you got the answers.
I'm gonna turn it over to Abe and Joe. We worked together for a long time. I know Joe for a while, and I don't think that there's a better grouping of two people that can speak to what changed and what still wins than these two guys. So take it away.
Want me to
Joe,
get
go
going?
ahead. I'm still getting comfortable with the packed room here, so I'm going to let you take it away while I calm down.
So I wanted
get
to thank the
comfortable.
ReFinance panel for having us in this closet, and it's very nice. I've never seen such a nice hallway to speak at. Anyway, for those that don't know me, I'm Joe Fingerman. I currently head the commercial real estate lending efforts at PPAC Private, and I'm excited to be here today with my good friend. We've known each other for 40 years. We met when we were 10. Okay, close enough. But Abe Hirsch is one of, what's your title? Executive to the executive of Meridian Capital. And we're here to tell you everything we've seen in the last 20 years of doing business.
Okay, thank you again to the Refi group and everybody that invited us to be here. We thank you. It's actually pretty impressive. I know we're joking a little bit about the size of the room and the people in the room, and also Joe coming out of a closet. He said something about that as he opened out of a closet. But there really is, it's a pleasure to be here. As Joe introduced me, Abe Hirsch. I'm with Meridian Capital Group, coming up on almost 23 years at Meridian. I'm a partner in the firm and had the pleasure of being at the firm when we were smaller in size till we got to 550 employees, and we were more of a local broker to becoming a national broker. Throughout the years, we've owned, purchased, sold, built, and created lending platforms that were Fannie Mae, Freddie Mac, and HUD licensed. For the multifamily side, we've since exited some of those businesses, and as we'll get through during the panel discussion, we've reconnected some of those relationships going forward, which as a broker, and I think the topic of this discussion is really the role of a broker in the real estate financing business. So you have a broker and you have a lender, and we're going to try to figure out and discuss really the relationship between broker and lender as opposed to the relationship between borrower, sponsor, and lender. And what I'll say is the importance and the need for a broker during that process.
So I think we could start, Abe. Maybe we take it back 10 years ago, 2016. I was at Signature, a blessed memory. You were at Meridian, and it was just a different time, right? We were lending on everything. We were in a low interest rate environment. A lot of errors got covered up that, if a sponsor didn't execute on its plan, well, the values were still rising. The interest rates were still low, and everyone in the world, still wanted to buy that loan from me or still buy the building if, it was being sold by Meridian. And it just continued on. I guess what has changed today that you see as a broker, and I'll tell you what I see as a lender, and, maybe we could talk a little bit about that.
So it's true, everyone's saying, the world has changed. The last few years, things have shifted. I'm doing this since 2003. Ralph Hertzko, who runs the firm, is doing this since 1988. So I've seen 2 cycles. He's seen 4 cycles. And the reality is I think the role of the broker has remained constant in each and every cycle. And the role of the broker is really we're not owners, we're not sponsors, we don't create value in real estate, we don't manage expenses, but it's to really ride and or understand, there's a better way of saying it, the lending environment at that time. And I think if you look at any cycle and the things that have changed, the only constant that remains through every single cycle is that the real estate still exists, the tenants still need a place to live, the landlords still need to collect rent, and the landlords still need to pay their expenses. What changes is I'll use the phrase, the lending game, the financial engineering, how the things get packaged, cut up, sold, stripped down, how Wall Street or the lenders or the capital markets make money in selling and bifurcating mortgage notes. But what remains true, and what remains true to the broker's job, is that the constants always remain. The fundamentals of real estate are always there. So, the lending environment has changed. We talk about, you said, signature of blessed memory. So here in New York City, it's true. The big banks that probably, from Meridian's perspective, between Signature Bank, First Republic, New York Community Bank, which is now Flagstar, I have some of my ex-Flagstar friends in the room here, and some other Flagstar colleagues that are still here today.
Everyone has new business cards. It's
while
2026.
while they're out there lending and doing business, but the reality is, just from Meridian's perspective, and yes, we like to say we're a big broker, but certainly this is a conference full of brokers, and there's room for everybody to do the business. But just with those three banks alone, we were doing between 18 and 20 billion dollars of business a year. So it wasn't always 18, it wasn't always 20, but for the last number of years, as things were going, they just go ha ha. We were doing that kind of business, and the reality is that money's gone. That money doesn't exist.
Yeah,
So where does
another lender, Capital One, was very involved.
Capital One, who's still a big partner of ours, but mostly on the agency side, they pretty much in New York, I don't want to say shut down, but they've really limited,
pulled back,
really limited their multifamily lending platform. They want to shift everything more to the capital market side. So what's changed is some of the financial engineering has changed, some of the lenders have changed, but the fundamentals, that which owners still need, and the fact that they need financing, that still remains constant. And the role of the broker to understand what now is available in the market and how to get those deals financed, that still remains true.
I think when you look at these banks that have pulled back or changed, and sadly we went through a lot of turbulence, I think we were first and then others followed. It's still the same core values, knowing the client, knowing the broker, understanding the property. But I also think as a broker today, you really need to understand the bank's mission, how they're, PPAC today is not looking for just one-off loans, what I call one-hit wonders for those that, had a record collection back in the day. It needs to be a full relationship. And I know when I look in this room and I see other lenders, unless they're Fannie or Freddie, or perhaps insurance companies or CMBS, they don't need that. But I know that for most banks today, you need to give them deposits. You need to be interested in doing more than just the one loan. Listen, every one of us wakes up as a lender in the morning and says, okay, I have X to lend, and I've got to get the most out of X that I have to lend. I think that's true throughout. So when you look at the markets, every year you hear about, it's a wall of maturities, there's billions that have to come done, and then you don't really ever see these deals get done. But I think that there's been like a sort of a shifting of the table, right? Thanks, Judah, for joining us. It's nice. What was I going to say? I was so rudely interrupted.
Judah always takes your breath away when he walks in.
I know. He's going to come down the aisle as if you're the groom or the bride. What was I going to say? Today for PPAC, we're looking for loans that are under $12 million. And I know my Connect One comrades are in the back of the room or friends, and they may have a different threshold. We're looking for X in deposits. We're looking for certain asset classes, multifamily, retail, office, industrial, but like rent regulated, I can't do right now because there's just such uncertainty for the bank to lend on that. But if I was, but we're looking for the more fuller relationship. We're looking to do 5, 10, 15 loans with the same sponsor, many of which we had a long track record with at North Fork or Signature and my legacy institutions. So when someone calls me up and says, I have this deal and it's the greatest guy, someone called me the other day, we'll just use a fake name, Sam Schwartz, he had an account by Signature. Okay, well, Signature had like 1 million accounts. I don't know Sam Schwartz. I don't know anything about him. And the broker needs to educate me, and he could be the biggest Sam Schwartz in the world, or he could be, the guy who owns one building. I need to know a little bit more about it so I could figure out what to do. So I think, it's a little bit more challenging than what it was today.
Last point, I want to interrupt and ask a question as a lender. When that Sam Schwartz guy is introduced to you, would you rather Sam Schwartz called you? Would you rather the broker called you and presented to you? As a lender, how do you feel about that connection being made by a broker versus the client?
We love the brokers. We want to see them from the brokers. You have my home address, right? Okay. What was I going to say? No, I'm kidding. Nick's getting all upset over here. No. I will tell you that getting a deal done with a broker involved with a good broker is much easier for the banker to work through. They know how to produce the information. They know how to move things along. Like if I have a borrower that comes direct, and we order the appraisal, and then 3 weeks later we have a weekly meeting. We had one this morning at 9:30 where we go through the whole pipeline with my underwriting team, my closing team, my KYC team, which is something we didn't have in 2015, and that's know your customer and get it through compliance and everything like that. We have a guy who handles the appraisals, and he says, "Oh, that borrower hasn't even responded to the appraiser, so we can't get the appraisal." With a broker involved, they move things along and they understand how to get things done. So we love the brokerage community, and we're very happy to work with them. But what we don't like, and I'll use this term loosely, is lazy brokers who just send in the deal. There's no information. Like we had a deal last week. It was a 5-unit retail building. It's a great address. Everything's great. There's no square footage. There's no lease expirations. There's no information about who the borrower is, what they owe. Like, that goes to the bottom of the pile. If the email even gets open past, just a quick cursory look at it. Abe and I a couple months ago were joking. I want to be able to hit Control P, that's how I print, and 1 page or 2 pages print. I don't want to get 50 pages because somebody hasn't formatted the information. I don't want just something that's forwarded along from, borrower to broker and that broker better know more about that deal and ask questions. That's the broker I want to deal with. Another thing that drives us crazy, and this happened a little bit more at Signature as we were more established, where we found brokers were just sending us the deal. We would say, this is it, and eventually we would do 10, 12, 13 deals with the same client. We became close with the client, and then they're suddenly saying, we don't want to pay the broker anymore. Well, the broker in all those cases hadn't done his job of giving them a matrix of 4 or 5 quotes like Meridian does, showing them life insurance companies. What was amazing to me when Signature, was seized was most of these people had nowhere to turn. Like, we closed our first loan with one guy. He had $400 million in loans with us at Signature. He says, all right, we have $395 million more to go. I said, well, we're not going to be able to take that. Like, you need to spread this, get a broker that's good, and show it to other lenders. And it's not just going to be a bank. It's going to be a life insurance company. It's going to be CMBS. It's going to be a debt fund on some of the trickier things. So, I hate to say it, all of us work hard, but you've got to really be laser focused on your presentation. I'd rather you wait 3 days to get me the deal, and then I know when you get if you're a broker starting out, you get the deal, it's like you got to have it closed because this is, the way to do it. Get a full package together, really look at it, analyze it, say, if I'm a lender, where are the positives and negatives here? And a good broker, when I call them, will say, hey, Joe, I've looked at the deal, that retail tenant, they're doing great sales. They've been there since 2001, and then we know the lease comes due next year, but the borrower is already speaking about them renewing. And by the way, the rent is $41, and I just did CoStar, and it's $75, so I'm not too worried, and, blah, blah, blah. That's a good broker.
I obviously couldn't agree more with that, and I think something that we at Meridian certainly try to train and push our people. I say, by the time we're ready to submit a deal to a lender, we really should know the deal better than the client. Now, it seems cliche and it seems weird, and how could I spend a few hours or a couple of days on a deal and say that I know the deal better than the client? Because the reality is, and we're not talking about a client who owns 1 or 2 buildings, or even if they own 5, 6, or 10 or 12 buildings, whatever that may be. The reality is their job is to be focused on operations. Their job is to be focused on rent collections, growing rents, and so on and so forth. And while all of that is needed for refinance and all that is needed to obtain mortgage debt, it's how you understand that and how that gets presented and how that gets shown. I used to tell clients all the time, you want to tell the lender how much money you're spending on renovations because that's great. So you're going to walk a building with a lender and say, oh, by the way, I'm vacating that apartment because I'm going to spend $20,000. I'm vacating that apartment because I'm going to spend $5,000 renovating, and I'm vacating that apartment because I'm about to spend another $30,000 renovating that apartment. And you think you're doing a great job telling the lender about all the apartments you're vacating because you're going to spend so much money on renovations. And when that meeting's over and I'm walking that lender back to the car, you know what the lender says? Call me in 6 months. I can't make this loan today because I'm going to have a 40% vacant building over the next couple of weeks. So here you have a sponsor doing the right thing, putting equity into his building, but thinking that he knows exactly what a lender wants to hear how. And it's not a game. It's not a scam. It's just a reality. When a lender makes a loan, a lender takes a deal to the credit committee and puts it on their books at that moment in time. We're talking about stabilized deals. We're not talking about bridge lenders. We're not talking about high-octane deals. Savings bank, regular, bread and butter kind of deals. The deal needs to be stabilized at that time in the moment. Of course, the lender wants to hear that you're adding value into the building. Of course, the lender wants to hear you're maintaining units. So all those things become the job and the responsibility of the broker. They need to understand, like Joe says, what lender wants to see what.
Right. 'Cause in that scenario, there could be 5 lenders in this. Where are we, in a hotel? In this hotel today, who want a half-vacant building, who want to do that and want to get paid for that risk, and then there's a bunch of us that are ready to jump out the window because we don't want that. The job of the broker is to say, this is the right option for you. This is why maybe the cheapest rate isn't the best rate, because this bank. We had a guy on the way up here today. Ken and I drove up from Long Island, where our office is. He's buying a building. They're all condo units, and the most important thing in his deal is not the pricing, it's not the term, it's the release price, if he could maybe sell some condos. And that's what makes the deal. Once we understand that and the broker explained that to us, that's fine. PPAC might have a product to do that, but maybe it's better off now that the broker brings them if they have to spend a lot of money to a bridge lender or a private lender or whatever it may be. So it's really dependent on what the deal looks like. We all want to be able to work with people we like. If I may, not go off on brokers, but, clicking send and then calling me on my cell phone a minute later probably is not the greatest idea, and it happens all day long. Like, did you get my email? I don't know. Does many people not get emails? But, it's, we work through it. But understanding what the bank or the lender wants is very important, and that's the job of the broker. You have, I say to borrowers all the time, there's 500 different people that can provide capital to you, right? It's not your job to go have lunch with every one of them. It's the broker's job, and the broker should know what's going on, and the right capital providers will go to a firm like Meridian or your competitors and sit at their, conference room table and say, I remember when we were at Signature, we came in there the first week, this is what we want, and we left with deals. We did the same thing at PPAC, and it was great, and that's what we want. Once we explain it, everyone fits right in the box.
Understanding bankers' moods and how moody they are and what they want and don't want and how they want to see it, it's really part of, the unwritten rule in our job. Case in point, I was traveling yesterday, working on a transaction. It's a local lender here, one of our local banks, and the mortgage rolled and matured. And for the last 4 weeks, we've been trying to get an extension at the bank. And the bank says, maybe we'll give you a 90-day extension, produce a term sheet for the refinance. Once you show us a term sheet for the refinance, we'll give you a 90-day extension. This is going on and on for weeks and weeks and weeks. Last night I get on the plane, I'm flying back, I check my emails. Okay, here's a term sheet for a 1-year extension. I called my colleague and I said, what I missed today? We're going at this for weeks, can't even get the 90-day extension. I get on the plane, and boom, here's a term sheet for a 1-year extension, which is what the client has been asking for weeks. So my colleague always goes, because I'm good at my job. I said, no, really, what changed? What did I miss? I know I traveled. What did I miss? He goes, no, I spoke to X, Y, and Z lender a few days ago. I saw what mood he was in, so I didn't push. I said, okay, we're trying the 90-day. We're out to a bunch of other lenders. We're getting you the extension. I spoke to him yesterday. I called him. He was in a different mood. I said, we're probably going to have this. And automatically the lender goes, okay, here's what I can do. I can give you a 1-year extension if we do X, Y, and Z. Boom, we have a term sheet. Client signed the term sheet last night, wired in his $25,000 good faith deposit. We're going to get this guy a 1-year extension on a loan that's maturing in 14 days. Why?
Ken, we'll discuss this later. This should not happen. I'm joking.
No, it wouldn't happen at PPAC. Don't worry.
Right. But the other thing I think...
No, but the point is, that's the role of the broker.
Right.
No sponsor is going to be able to get that. No direct relation able to get that. And it's understanding how the lenders, what the lenders really want and how they operate and what they need. That's how we all as brokers provide that level of service to the client.
The other thing as a lender, I think, and as a broker, you have to think about as capital providers, let's just talk about banks. When I started at North Fork, suddenly there was this bank called Commerce that showed up, and they were going to take every one of our accounts, every one of our loans, and they went on to become TD, and everything was great, and North Fork became Capital One, and you know that. At Signature, Bank United was opening. Bank United that was ran by North Fork leadership showed up in the market, and you know that's going to be the demise of Signature. I think competition. You know, we showed up at PPAC. People that worked for me, literally above us in our office building, arrived at customers. A bunch of New York community alumni went to Connect One, and competition is good. I'd rather have 5, 6, 7 lenders and see what I can do and not do and win the deal. So it's the job of the broker to know who's in that market. And what I just described all happened in what, the last 15 months? You know, of these different banks going into the market. There are 3 other banks that we're competing with. You know, I was at Signature when MetBank opened. Again, they're a competitor, you know, so everyone has a special niche of what they do, and I think it's better. Everyone's like, oh my God, are you worried about the competition? As a lender, I'm not worried about the competition. The more, the merrier. The more capital providers. We can't do it all at PPAC. Connect One can't do it all. Well, maybe they can, but, you know, we're just saying, like, it's just there's different spots for each place, and as a broker, you need to really know that.
I can't say I don't worry about competition. While practically speaking, as a broker, we worry about competition.
But if you're doing a good job, they should be coming back to you, and they should be loyal to you, and we will be loyal. I will tell you that PPAC, just like we were at Signature, are generally going to honor the brokers that brought in the business. But when the brokers get lazy and they let their customers go astray, and some of them do,
I agree.
or they've left the business or whatever it may be, it's very hard for me to say to someone who, when I was at his son's bar mitzvah 10 years ago, you can't come direct or whatever it may be because his broker's no longer in the business.
I agree. I was going a slightly different point. And while competition is healthy, competition is good, and we have a lot of friendly competitors in the business here, I do believe there is enough business out there for everybody. It's true, we compete, we go, but at the end of the day, if everybody behaves and everybody acts like a mensch, the reality is there's enough for everybody to go around. There's enough good business for all of us to do.
I think we also need to look at it and put today's cycle in perspective. I left Capital One in November of 2007. Went to Signature that had $200 million of real estate loans. I kind of missed the 2008 downturn. We went through COVID where we thought the world was going to end. We went through 9/11 where we thought the world was going to end. Eventually, I believe New York City, as far as rent-regulated units, or just the city as a whole, will come back. We're seeing it. And I was in the city Monday and Tuesday. I can't get a reservation anywhere for lunch, even at Reserve Cut with Meridian's, you know, connections. I'm just saying it's a cyclical business. We might not be at the exact right spot, but it's going to come back, and the relationships are what matters the most.
I'm going to pivot for a second because a lot of the discussion that we talked about is probably more centered and focused of, I'll say, New York City, tri-state, you know, multifamily business, which is really where the banks that we talked about and all the banks that you've worked at have really played a role. But the reality is, and a lot of people here, myself included, some colleagues in the room, ex-colleagues in the room, we really play on the national spectrum. And when you go out of state, and out of state means, I'll say outside of the tri-state area, the reality is the savings banks are far and few in between. It's true, we have local banks, and we can do a $12 million construction loan with a local bank in Arkansas, probably called the Bank of Arkansas. But those are, you know, at Meridian, on an average year, we probably do loans somewhere between 250 to 300 different lenders. That's a lot of lenders. But I'll say it's the same 80-20 rule. We do 80% of our business with 20% of those, you know, 250. So there's a deal here, a deal there. There's a couple lenders got 1 deal, 2 deals done, and that's the role of the broker. The role of the broker is to really canvass a market and find that one-off lender, wherever that may be, Jackson, Tennessee, that's interested in doing this particular property because he drives past it every day to and from work. But on the larger scale, there's been a notion over the last several months, given, I'll say, a lot of noise in the press of certain transactions that have happened around where borrowers are going direct. I want to deal direct with my lender, whether it's Fannie, Freddie. What can you offer me as a broker? I have a direct relationship. And I think that it's true. There are a lot of lenders that have now built out their platforms to target the sponsors directly and maybe not need a broker. I think we're all brokers in this room or lenders in this room. I'm not sure how many sponsors are officially here. But the reality is, in totality, I disagree. Yes, you'll find a unique situation. You'll find a deal. You'll find a relationship where a sponsor actually has a good relationship with a particular lender. And if he goes to that lender, he's going to get a very efficient deal and he's going to get the good deal. It's true. But by and large, as an industry, if you're doing this long enough, you realize no two deals are the same. Every deal has its quirk. Every deal has its nuance. It could be a stabilized multifamily for $23 million in North Carolina. It doesn't matter. There's something unique about that deal that's different than a deal in Austin, Texas. And it's the job of the broker to make sure that he's presenting that deal to different lenders, even if they may be agency lenders, but you have one agency lender whose credit team has got an appetite for a particular market, and because they're corporately headquartered there or because they're based out there, so they're more comfortable with those environments or those markets, I should say, versus another lender, while they call themselves a national player, they actually prefer to focus their business in other areas. So I don't believe that it's a commodity business. I don't think the real estate finance business will ever become a commodity business. Sure, AI is going to come in and it's going to streamline a lot of the process. Direct lending relationships are going to come in and try to smooth over some of the hiccups, which were, in the old days, even prior to there's the corporate banker, big corner office, dark wood, hard, mahogany furniture, and nobody can get near him, as opposed to no ties, and we wear khakis, and we sit at the bar, and we have a drink, and we structure a deal. So the times have changed, and I recognize that, but no matter what, I think it will never be fully commoditized, and the value of a broker, while he may have to pivot and change his approach a bit, will always ring true and always be needed in our industry.
I'm supposed to reply to that?
Top that, Joe.
Okay. No, listen, I think brokers are needed. Yes. We could get rid of the brokerage. I'd have to hire 50 people, put on my payroll. I'd rather have it on Meridian's payroll or others. I think it's needed in the market. You just have to, I think, work harder and really, and I would say something you said, the 80-20 rule, which, comes up all the time in business. I would say 80%, I would say, 80% of our loans are to the same people over and over again with the same brokers over and over again. And there are brokers here that I've known for years, and I can tell you I've never closed a deal with them. Nothing wrong with them. It's just different, that type of thing. So are we doing questions, or there's no questions? Okay. But this lady wants to ask one question.
She's died to ask Joe a question.
She had to take a picture of me. She's going to tell me that she sent me a deal and I didn't call her back.
No.
Okay.
I'll ask you some more questions later, but really, everything you both said was super, super informative and helpful, and I appreciate it so much. Andy, Joe, you mentioned that you...
Hold it closer.
You mentioned the broker who emails you a deal and calls you on your cell phone a moment later, did you get my email? And you sounded annoyed by that. What would you prefer in terms of contact?
Listen, I would say right now at PPAC, we're receiving 200 to 300 inbound deals a week. Guys, you think that's fair? And, there's just no manpower to go through that. We've tried AI. When AI had asked me what the cap rate was, what the vacancy was, what expenses it should use, I might as well just have Ken do it. So it's like, I would say there's a delicate balance. A full package, 24 hours later, like an email, have you followed up on it?
No call to lead in.
No.
No call.
No,
First
I
email.
hate, I say to people all the time, we can go to have a meeting and we could talk about hypothetical deals till forever. I'm much better off when I go to the meeting with a deal in front of me so we could talk about how to do that. Is that?
Okay. I think we're good.
So we appreciate everyone
Thank
coming
you,
out
everybody.
to this hallway, and thank you to the ReFinance Summit, and we'll be here. We have a PPAC crew sitting here. We've got Avi, who runs our Lakewood and Brooklyn
any
operation.
brokers in the room that really are looking for a platform that they want to join, come see me decide. We're here at Meridian.
212-972.
We're happy to have that conversation. Any ex-brokers in the room that want to have that conversation, here and happy, willing to have that conversation as well.
Thank you.
Thank you, Joe.
Thanks, Abe.